Hi everyone, welcome back to our channel. Anyone with basic knowledge about crypto knows that there are numerous stocks out there to buy from. However, the main question is which stocks can bring you the best results? Well, in today's video, we'll answer that question as we tell you about the best stocks that you should be keeping an eye on. For a stock to be a worthy contender, it must have quarterly and annual earnings of at least 25%. You need to look at the supply and demand for the stock, going for one with strong institutional support. Luckily, all the stocks on our list have met those above criteria. Airbnb. Airbnb suffered a fall, but is back to 152.86 buy point. This is for sure a positive sign. Airbnb suffered a tremendous loss when the coronavirus hit. However, it managed to launch its IPO in December, which astonishingly gathered $3.5 billion, quickly taking away the largest IPO of the year. At the moment, the stock does have a few concerning signs, like the relative strength line. It declined after the pop, but it's getting back up. Moreover, the Airbnb stock has a current IBD composite rating of 26 out of 99, a poor one. So why invest? Because big money is backing up the stock, which gives Airbnb a very strong institutional sponsorship. We all know that's what the I in CAN SLIM stands for. Moreover, the stock has an accumulation rating of B-. It shows moderate buying among institutions over 13 weeks. At the moment, Airbnb is competing with Booking Holdings, Expedia, and Trip.com. Snap. The Snap stock manages to rebound from its 10-week line and is still in range. It gapped over a long consolidation point of 73.69 and is still in the buy zone above this entry. Snap surprisingly finished higher last week and managed to close above its 21-day exponential moving average, even though it had to give up a few gains. When it comes to institutional support, the Snap stock has solid backing. It can proudly boast off 8 executive quarters of increasing fund ownership. As a result, 50% of the stocks are fund held. It has an accumulation rating of B- at the moment, same as Airbnb. Back in July, Snap posted its results. According to the reports, the firm had adjusted earnings of 10 cents on revenue of $982 million. Experts predicted that Snap would report a loss of 1 cent on revenue of $845 million. However, Snap delivered outstanding results in the second quarter. Analyst Brian White agreed with the sentiment as the company's daily active users shot to 293 million, crossing the estimated 290 million. We also get to see revenue jump by 116%. Overall, a good stock. DocuSign. The DocuSign stock seems to be doing well. It is buyable off of a 1-week moving average. It is showing strong quarterly earnings. Moreover, shares cleared a flat base buy point of 310.61, but closed just below that level. In other news, the company's strength line has been soaring. Not only that, but the Docu has been trading above its short-term moving averages. DocuSign, based in San Francisco, surpassed analysts' views as it reported 47 cents a share on sales of $511.8 million on Q2. On a year-over-year investigation, we can also see that the sales jumped 50%. Currently, the stock has an excellent composite rating, with earnings outclassing its stock performance over the last 12 months. Analysts everywhere can acknowledge that DocuSign is showing promising growth despite the COVID hit, which is understandable since its services are a clear need for remote workers. If you liked the video so far, leave a like. Also, do not forget to subscribe to our channel and turn on the notifications so you don't miss out on any crypto buzzes. Jumping back in, Square. The Square stock is competing with PayPal, as everyone knows. It had an average week, but did finish higher. At the moment, it's in the buy zone above a handle entry of 267.57 cents. We saw a surge in shares, 11% to be exact, back in the week of August 6. The company hit a record of $289.23 a couple of days later. Moreover, the stock has an impressive composite rating of 98. It has reported a gain of 24% so far. However, investors still expect more. The stock has solid institutional support too, with an accumulation rating of B. Sponsorship rating is even better with an A. Square owes a lot of its revenue increase to its subscription and service-based products. It reported a revenue of $558 million in the first quarter. That's about 88%. Needless to say, it's a promising stock. Mercado Libre. Mercado Libre stock broke out of a cup with a handle base and landed in the buy zone. The stock has made a closing with 4.3% last week and is clear of its short-term moving averages. We see the relative strength line take a breather, but it's back on to gaining height. The stock had to experience 2 quarters of losses, but earnings are now back, stronger than ever. We can see that from the relative strength rating of 88. Recent reports show that revenue has doubled to $1.7 billion. We also see earnings jump to 23% to $1.37 per share, surpassing the 11-cent predictions. Mercado Libre is the largest e-commerce service provider in Latin America. As of April, Mercado Libre received 668 million monthly visits, while Amazon had a meager 169 million visits. When a stock surpasses Amazon, you know for sure they're good. And with that, our list comes to an end. Let us know in the comments what stocks you think we should keep an eye on. We'll see you next time with another video.